The next 48 hours could be a make-or-break moment for XRP investors. With the US government set to make key decisions on the Trump administration's tariffs, everything could change for the cryptocurrency market. These tariff decisions have already shown they can shake up the global financial landscape, and XRP, one of the leading digital currencies, isn't immune to the chaos. Why does it matter? XRP is designed to make cross-border payments faster and cheaper, and it's heavily tied to international markets. So, when global trade policies shift, especially in the case of tariffs, cryptos like XRP can experience major volatility. The upcoming decisions could either help drive the price of XRP up or send it into a tailspin, and the next 48 hours are crucial in determining which direction it will go. Tariffs are a powerful tool that can impact everything from the price of goods to the stability of financial markets. When tariffs are imposed, they often lead to disruptions in global trade. For XRP, which is used by companies around the world for international payments, any disruption in trade can lead to price fluctuations. The market's reaction to trade tensions is usually swift and sometimes unpredictable, and it's been proven that even the hint of a trade deal or a setback in tariff negotiations can send the crypto market into a frenzy. With the ongoing back and forth over tariffs, XRP's future is uncertain in the short term. If the next few days bring clarity and confidence in trade relations, XRP could see a surge in value as investors flock to it. On the other hand, a major escalation or breakdown in negotiations could spark fear, causing investors to pull back and sending XRP's price spiraling down. The situation is tense for XRP holders who are hoping for a smooth resolution. For many, the next 48 hours will either confirm their belief in XRP's potential or force them to reconsider their positions. It's a high-stakes moment, and as an investor, understanding how tariffs impact XRP's value is essential. With such a volatile market, investors are faced with a tough choice: take risks with the hope of a positive outcome, or play it safe and hold off until things settle. The countdown has begun, and the decisions made in the next 2 days could very well shape the future of XRP and its investors. The impact of Trump's tariffs on global trade has been profound, and it's not just traditional markets that feel the effects. The cryptocurrency market, including XRP, is deeply influenced by changes in international trade policies. For those who may not be familiar, tariffs are essentially taxes imposed on imported goods, and they can be a powerful tool for influencing trade between countries. When these tariffs go up, they usually lead to higher prices for goods, slower trade, and in some cases, economic tension between countries. For the crypto market, such tensions can send shockwaves through investor sentiment, causing uncertainty about the future of digital assets like XRP. XRP in particular is uniquely positioned in this scenario. One of the primary uses of XRP is for cross-border payments. Ripple, the company behind XRP, has built its technology to facilitate quicker, more efficient international transfers of money. This means that any global trade disruption, like the ones caused by tariffs, could directly affect the demand for XRP. When tariffs are introduced, countries often face trade slowdowns or the need to find new, more costly ways to do business with each other. This can lead to businesses looking for alternative solutions to keep transactions smooth, and that's where XRP could play a crucial role. Ripple's network is designed to make these transactions faster and cheaper than traditional financial systems, which is why it's relied upon for international payments. However, when trade tensions rise, so does market uncertainty. And cryptocurrency, being as volatile as it is especially sensitive to these shifts. XRP's price could take a hit if the market fears that the tariffs will cause a prolonged slowdown in global trade, reducing the need for Ripple's services. On the flip side, if a breakthrough in trade talks leads to a more stable environment, it could boost investor confidence in XRP. Investors who have been cautious may decide to pour money into XRP, believing that a resolution in global trade could lead to a surge in demand for Ripple's cross-border payment solution. The key takeaway here is that XRP isn't immune to the broader economic effects of trade policy. As the US continues to negotiate with other countries over tariffs, the global economy's stability, or lack thereof, will play a significant role in XRP's price movement. In the next 48 hours, as decisions are made and news breaks, the crypto market will respond quickly. Whether XRP experiences a boost or a downturn depends on the news that comes out of these negotiations, and for investors, staying informed is key to navigating this volatile period. XRP's role as a global asset makes it particularly vulnerable to shifts in the international trade landscape. As a digital currency designed to facilitate fast, low-cost cross-border transactions, XRP thrives on the stability and efficiency of global financial systems. However, when trade policies like Trump's tariffs cause disruptions, they can directly affect XRP's demand. The nature of XRP's value is tied to the willingness of businesses and financial institutions around the world to adopt Ripple's payment technology for international transactions. So when trade relations between major economies like the US, China, or the EU become strained due to tariff disputes, businesses may reassess how they handle cross-border payments. This leads to a situation where XRP, despite its technological advantages, could face less demand if global trade slows down. In previous instances, we've seen how trade tensions, especially between the US and China, caused market jitters that spilled over into the crypto market. During periods of uncertainty, investors tend to pull their money out of riskier assets like cryptocurrencies and seek safer, more stable investments. XRP has experienced these shifts before, where positive news about trade relations sparked a rally in its price, and negative news about tariffs or trade wars sent it tumbling. This volatility means that XRP's price is highly susceptible to the outcome of the ongoing tariff discussions. If the next 48 hours bring favorable news about trade negotiations, we could see a surge in XRP's price. The cryptocurrency market in general tends to react positively to clarity and stability. If it becomes clear that tariffs are being reduced or trade deals are being struck, investors could regain confidence and start to see XRP as a safer bet in an uncertain global economy. Institutional investors, who are often more cautious, might feel more secure in making significant investments in XRP, driving up its value. On the other hand, if trade talks fall apart, or if new tariffs are imposed, it could trigger another round of market sell-offs, including in XRP. Fear and uncertainty could cause XRP's price to plummet as investors worry about the future of international trade and the impact of tariffs on Ripple's global payment network. In such a scenario, short-term traders could pull out of their positions, and long-term holders might start to question whether XRP can maintain its value under such unstable conditions. Ultimately, the next 48 hours are critical because the outcome of the tariff discussions will directly influence the level of confidence investors have in the future of XRP. Whether we see a sudden surge or a sharp decline, the decisions made in the coming days will have a lasting impact on XRP's future and could be the defining moment that sets the stage for its next big move in the market. For XRP investors, staying informed and ready for any potential outcome will be key in navigating the rapidly shifting landscape. With the potential for significant price movement in the next 48 hours, it's crucial for XRP investors to be prepared for whatever comes next. The market is incredibly sensitive to news, and with Trump's tariffs dominating headlines, the decisions made in the coming days could cause XRP's value to swing dramatically. So, what should you do if you're holding XRP during this uncertain time? First and foremost, risk management should be top of mind. In times of high volatility like this, it's essential to have a clear strategy in place.